Creating affordable homes remains one of the hottest topics and biggest issues within Canada. And it's like no matter where you look or who's in power, it really does feel like nobody has the answer to this problem. And that's where you come in. Because in today's episode, we're going to expand on the affordable housing ideas that we shared last week that resulted in an absolute flurry of comments and ideas from our viewers. And some were really impactful. On top of this, there is a fascinating sale coming up in a newly completed condo tower where buyers can get 25% off on a brand new home. Maybe that's the path to affordability. And if you've been looking for that unicorn deal for a home, well, this may very well be what you've been waiting for. And as always, within Canadian real estate, there is a number of important pieces and metrics and factors that have changed, and new data is out, and we're going to release all of that and share our insights when it comes to inflation, consumer insolvencies, employment, consumer confidence, mortgages, as well as an update as to the likelihood of a rate cut at the Bank of Canada's next announcement in June. Let's dive in. So off the top here, we want to talk about affordable housing in Canada, the hot topic issue that it is. The new affordable housing plan from our newly re-elected Liberal government has basically come to light, and it showcases that they're really only planning to bring affordable rental homes to Canadians. That's something for sure, and it's needed, but it doesn't ultimately help people who want affordable homes that they own, that they can be proud of their ownership. And last week, I shared a number of ideas on how to potentially bring affordable homes to end users. And it sparked, like I said, a flurry of comments. And in fact, last week's video was our most commented ever. So thank you for engaging. We really do appreciate the conversations that are being created from this platform. Now, sure, many people just trolled and shot down my ideas, but they didn't offer too much value. But there were a number of people who offered some really insightful ideas. And they maybe want to double down on the affordable housing concepts. And also, thinking about this all last week, a ton of new ideas have come to light that we want to share with you today. It also gave me a powerful idea. Let's use this platform to collaborate on ideas that might truly help bring affordable homes to Canada, right? We have over 10,000 people who watch these videos every single week. And if we can get just 1% of you to contribute one idea, that's over 100 ideas that might help bring affordable homes to Canadians. I'm going to gather all these ideas that people contribute and compile them into a document and present them to our contacts within the government and see if we can't escalate some of our great ideas up the chain of command and potentially take these ideas and have them implemented by certain levels of government and help them plan affordable homes and bring them to Canadians. Okay. So for now, I don't know, the working title I have is the Dan Plan, but I'm sure we'll come up with something a little more creative shortly. But here's a recap of last week's ideas plus the new ones. Okay. From the development side, right? Who is actually building these homes and how do we make the development side of things feasible, right? We all know it's so expensive to build homes right now that most developers have stopped, right? They're not even bringing new homes to market because they can't sell them for what they need to barely cover their costs and make a marginal profit. So to help instigate a lot more development, of course, is the reduction on the costs, right? We talked about removing or dramatically lowering the government DCCs, right? The taxes that are required and charged by municipalities to bring homes to market. The government mentioned, of course, that they want to have a division created where they are the developers as well. So they're not going to get any profit, right? So you remove developer profit from the equation, starts to bring the price down even further. Anything that is brought to City Hall that is going to be within the Dan Plan or whatever the Affordable Homes Act is going to be, those get fast-tracked. Now, I'm sure that's going to piss off some developers, but hey, we're trying to bring affordable homes, right? We're trying to do whatever we can to fix this mess. So affordable homes get fast-tracked at City Hall for permitting. This one I'm going to bring back to light because I really like it and I'm almost shocked it still doesn't exist. But we want to provide 0% loans for construction within the private sector. So the private sector can help bring product to market and not have to pay interest on construction loans. So the government provides those loans. And what happens is that money is actually shifted to the developer in the private sector. So maybe they still actually make a profit incentivizing them to bring homes to market, right? So instead of paying interest to the bank, they pay that amount to themselves to be able to have a reason to bring more homes to market. Okay. So there's some of the development ideas. Now, on the buying side, how do we make it affordable for the buyer? Well, the biggest hurdle, one of the biggest hurdles for buyers is saving for the down payment. And so let's remove that 0% down payment. Okay. Work with me here. I know that's going to raise some alarms, but let's work through this. So 0% down payment. The government has already discussed no GST for first timers up to a certain price point. Well, let's just expand on that. Okay. Let's make it a blanket. No GST on any home for any buyer, not just first timers, at any price, with, of course, it being just for their primary residence. Okay. Let's keep investment properties out of this. No GST on any property for any buyer if it's their primary residence. What's more, in provinces like Ontario and BC, let's remove the property transfer tax as well. Okay, that is just a very inhibitive cost, and it's only growing over time, and it's just more tax revenue that we don't even see in other provinces like Alberta. And here's another kicker. Within these segmented, affordable Dan Plan homes, people who live in them never have to pay their annual property tax either, adding to more affordability. Okay. And let's think about this. All those ideas I just mentioned, those last four, those can all be implemented into existing homes. Okay. We don't need to wait for the government to build affordable homes that are going to take 3, 4, 5, 6 years to actually come to market. You can go down the street today by implementing this plan and go buy a house with no down payment, no property transfer tax, no annual property tax, no GST, no down payment, etc. Okay. For example, like what does that actually look like? If you remove the down payment and property transfer tax on a $800,000 home in Vancouver, for example, that's $54,000 you'd need to come up with. Removing that requirement, and you lower the barrier to entry for many, many Canadians. Governments are looking for ways to subsidize housing, and the removal of these aforementioned taxes would certainly result in a lot of homes becoming a lot more affordable, again, overnight. So I don't know. I'm not saying these ideas are perfect or without need for refinement, but the intent here is to stimulate ideas and, take this community that we have and have other people contribute their ideas as well, right? Maybe it's something I said gave you some ideas and stimulated part of your brain. You're like, oh, well, that's okay, but I can think of something better. And then you submit that in the comments. So it's a collaborative intent for us to compile this list and put forward affordable home ideas, present to the government, and make the vision of us creating a notable difference. So thanks for listening to my rant here about affordable homes, and I'd love to hear your ideas and your comments about how we might be able to help finally bring affordable housing to Canada and Canadians in the comments below.
Oh man, I've got some ideas, but I think it's a tough corner that the government's backed themselves into here and promising these kind of outcomes. I think, Dan, one thing that kind of comes to mind as you mention all of this stuff, and again, this, the intent of bringing ideas to the table, I would like to see sort of a more scrutinizing audit of the DCCs, of things like if you're going to charge developers these high levels of DCCs per unit, can we audit the money going back to the government to ensure that it's actually going back into the community and not going to some slush fund that isn't making money somewhere else? I think if we did that kind of auditing, or if we had that kind of ledger available to us, maybe very quickly we would see that the government is probably acting just like a lot of other businesses trying to survive, which is robbing Peter to pay Paul. But you can't do that and tell people that these taxes are going to be improving your neighborhood when maybe they're funneling some other government program that's losing money that won't work. So for me, I would love to see an accountability measure when it comes to these taxes. You want to tax us? Fine. Show us the business case, and then let's audit it. Because you can't trust the government. You have to verify the government. So that's sort of my one of my ideas. But and that, again, Dan, is not something that takes a whole lot of money. That you just open up the books, some independent auditors, and let's find out where all this money is going. Let's have a nice report on it, and then maybe we hold some people accountable if that money didn't end up in our neighborhoods. Nonetheless, Let's have a look at housing starts. Let's move on here. So, housing starts in April surged a massive 30% month over month, hitting 279,000 annualized units. This is the highest reading since June of 2023. But, like Dan mentioned early on, this is driven almost entirely by purpose built rentals. That housing type saw a record 9,900 units started last month alone, bringing the 12-month rolling average to a record 93,000 units. Conversely, both condos and single family homes are at decade lows when it comes to starts, and this is something we've actually never seen before. Rentals are always lower typically than the other two housing types, but and that was the case until 2022. And subsequently from there, purpose-built rentals have had a huge margin of increase and lead by a significant amount. And this leads us to believe that there will be continued reprieve in the rental rates that we'll see across the rental market, likely for the foreseeable future. We won't see maybe massive declines, but we also may not see dramatic increases. I'm starting to think with all of these new condos coming in, how it wouldn't also adversely affect the price of condos, presumably, tempering these rents and increasing the supply of availability to those who would either be servicing the debt or using the condo. It will limit the upside equitable value of these units going forward.
Okay, who wants a house for 25% off? That's me. I'm raising my hand here. So there's something really unique for us to share with you today, and it might be a bit of the sign of the times as to how hard it is to sell recently completed and unsold homes. As we reported on last week, there's something like 2,700 vacant, unsold, brand new homes sitting on the marketplace. And a new initiative, new marketing campaign has just been sent to a bunch of realtors within our network, and I'm going to share it with you. So there's a project, a recently completed tower in Surrey City Centre. It's called Belvedere, and it features 275 homes. Now, when you visit the Belvedere website, it does show that they are quote unquote sold out. But what looks to have happened, and this does happen quite often, is I believe the developer probably held back a number of units, hoping to sell in a stronger market, make more money. Well, here we are, right? The building is just completed, and it is far from a better market. So the promotion has just been released, and they're going to be selling, their marketing firm is going to be selling the remaining units in what is being dubbed Condo Day. The deal is for buyers that they can come in and buy one of the remaining 70 or so units at 25% less than the original asking prices. And this brings brand new concrete homes in that area starting at around $720 a square foot. Now, let's be honest, that is a good price comparatively for brand new concrete homes in that area, right? Some are selling for $1,000 or more per foot. So 720 becomes quite compelling quite quickly. So like I mentioned, there's around 70 units left that for buyers who are interested, they will actually get to see the original listing price and then take 25% off of that, and they can offer at that new price. On top of this, professional appraisals have been done, and you'll be able to view those as well, with the marketing company stating that the average appraisal came in about $90,000 higher than the 25% reduced new price. That will understandably help with obtaining bank financing. At these prices, I mean, I expect them to sell out almost immediately, right? There's a big event happening on one day on May 31st, and people are going to be lined up down the street to buy these. So if you're interested in learning more about this campaign, there's a website for it. It's literally condoday.ca. So have a look at that. And if you'd like a chance to buy a home at 25% off, well, please contact us to learn more about which homes are available and how you can position yourself to get one.
Yeah. Man, it's a sign of the times. It's interesting. It's a great deal. I mean, I've sold a lot in that neighborhood, and buying a brand new condo in that neighborhood is very hard to find it at those prices, if you can at all. So that's usually wood frame prices, to be quite honest. All right, so let's have a look at the employment sector here. So expanding on the recent unemployment numbers to help give you a sense of, the real clarity on how dire the jobs market is in Canada, headline employment came in at about 7,400 jobs, or sorry, up 7,400 jobs month over month in April. Now, the hardest hitting was manufacturing and retail, which lost 58,000, but public administration hires jumped $37,000 for the month, though a lot of that was temporary admin work for the election cycle. And that means that outside of the election cycle, Canada shed about 30,000 jobs back to back months, leaving the annual growth rate in the public sector at the lowest levels since 2016. With overall employment at 6.9%, we're seeing the sub 25-year-old demographic being hit the hardest. This really doesn't come as a surprise, as these jobs are usually the first ones to get hit. And it's indicative of recession as well. A 20-year high in unemployment for people that are 25 years old or younger. That is horrendous. It's hard enough for young people in this country to save to get a job, to save to buy a house. But imagine now you can't even find a job. So the youngest are getting their luck's being compounded, right? Like this is getting harder and harder and harder. And this could have long-lasting effects too. This could push the dreams of home ownership out even further. And that does a couple of other things. That puts people on a risk curve that is even further out. So they'll do riskier and riskier things just to try and to keep up with the economy here. What's worse is if, we lose our youngest generations, we could lose them to more competitive and more affordable markets. That'll have a long-term effect on our economy. We have to fix this problem. Ontario continues to be the hardest hitting province, hitting 7.8% unemployment. It's the highest they've seen since 2013. And this was a result of that province losing 107,000 full-time positions in the past 3 months alone. And as of 7 hours ago, I just looked this up, Reuters just announced that TD will be laying off 2,000 employees in May. CRA has just announced last week that it will not be renewing another 1,000 positions. Outside of Canada, we heard Intel slashing a massive 20% of its workforce. That's 21,000 employees. And Microsoft is also cutting 3%, or about 6,500 employees, the largest it's cut since 2023. So all around, the unemployment rate, it's difficult.
A lot of grim news there, and ultimately not much sign of it potentially turning around. So how is this affecting people with mortgages? And this is important if you have either a mortgage renewal coming up, or maybe you're planning on a purchase or a sale. So new mortgages plus renewals plus refinances, they saw a massive jump of 70% more in March. That's year over year, and up 122% in Q1 as a whole. So for those people who are taking on new mortgages or renewals or refis, they're predominantly going variable. Variable remains the most popular by a pretty wide margin, sitting at 43% right now, with 5-year fixed currently the least popular with only 10%. That's the lowest since 2013. So clearly the majority of people who are obtaining a new or refinance mortgage, they tend to believe that interest rates are going to continue to fall, hence the reason they're taking variable, thinking that payments will shrink as rates go down. There's also obviously no penalty to move from variable into fixed, so people appear to be feel more comfortable taking that option more so than locking in. The issue, of course, is that right now the bond market is lifting, obviously in Canada, but of course in the States as well. And some areas, I think, we're hitting decade highs, meaning that many people might find themselves kind of stuck within a variable rate mortgage and continue to basically have to ride it out in hopes that the bond market drops, bringing down the fixed interest rate market with it. So we will see what happens and which makes more fiscal sense when. But today, that's kind of a snapshot of what's happening in the mortgage landscape.
Smells like stagflation. With that being said, let's jump on to inflation here. Inflation news in Canada, it rose by 1.7% year over year in April, and that's a notable decline from the 2.3% we saw in March, and marking the second lowest reading in over 4 years. This is the other side of that conversation, Dan. This also extends the trend of inflation remaining below the Bank of Canada's 3% threshold for 17 consecutive months, a signal that price pressures are at least superficially easing. A significant contributor to April's softer headline number was the decline in energy, falling crude oil prices, and the removal of the federal carbon tax. Imagine that, removing taxes would actually lower inflation. However, when we turn to core inflation measures, which exclude volatile components like energy and indirect taxes, a different picture emerges. The CPI median and CPI trim, key metrics that are closely watched by the BOC, surprised to the upside, rising to 3.2% and 3.1% respectively, the highest levels in about a year. These core indicators suggest that underlying price pressures are still sticky and now back to levels seen before the bank began its tightening pause. And this divergence is going to complicate the bank's path forward. After a soft labor market report seemed to pave the way for a June 4th rate cut, the resurgence in core inflation has prompted several economists to temper those expectations. As an example, BMO's chief economist, Doug Porter, he said, these readings present as much as a much less friendly inflation landscape. The Canadian 5-year bond jumped to a 5-month high after the announcement, cutting the odds of a June rate cut from 60% down to 30%. So all eyes will turn to the GDP report, which may provide some clear insight into how recent tariffs and global economic headwinds are shaping the broader Canadian economy, and in turn, where we go from here.
All the unemployment information that you shared earlier understandably reflects what's going on in consumer insolvencies. And that number rose almost 5% year over year in March, which is being led by Alberta at 16% increase in consumer insolvencies year over year. Now, let's keep in mind, we got to look at the big picture. And consumer insolvencies actually appear to be rolling over in Canada. They have not yet reached pre-pandemic levels, because if you remember, everybody was flush with cash during COVID, and then they weren't when all the helicopter money stopped falling. So we're now back to just under pre-pandemic levels of consumer insolvencies, and it's still below GFC levels. But what's more, what might actually be a bit of a silver lining here, is that we are starting to see business insolvency filings down a pretty impressive 21% year over year. But again, big picture, we're still about 50% higher than pre-pandemic levels. So business insolvencies are clearly still high, but they are trending at least in the right direction for about 12 months now. The total liabilities, now that does remain a concern, because when we look at consumer plus business filings in a dollar amount, well, that does continue to rise, and it's up a dramatic 45% year over year when we look at Q1 overall. It's now sitting at $25 billion on a 12-month rolling average. So that is something we definitely want to see roll over as well and start to come down, because businesses that are in debt do not hire and are obviously on the verge of potentially going upside down and closing forever.
Or cutting your job, like we talked about. But yeah, let's move on to consumer confidence. So let's end this on a bit of a positive note. The Consumer Confidence Index has seen the sharpest 3-week increase in its history. Maybe it's because the sun's come out. I don't know. When you look at the real estate outlook index, it's spiked upwards as well. With so much of real estate being bought on how we feel the market is going to evolve, this index is obviously a forward-looking indicator of what may come. While some may look at the spike as a potential boost in future sales, do remember we're still below the last 2 years. So, those were considerably low sales volume years in Canadian real estate to begin with. So overall, consumer confidence still on the low side, but improving. And, we'll see where it goes from here, but I expect it to just kind of beat away here. We'll see.
So there you go. The sun came out. People are feeling more confident. But regardless of what is going on in the marketplace, there is always going to be a need for affordable homes. And just to kind of recap here, we really do want to hear your feedback and your ideas on collaborating with us on creating a fantastic proposal to bring forward ideas for affordable housing. Look forward to seeing those in the comments, and look forward to seeing you here again next week. Have an awesome weekend, and we'll see you again soon. Bye.